Duma Wojak deposits his DoorDash earnings into the bank, unaware of how banks profit from deposits. Banks profit by paying minimal interest to depositors while lending at higher rates. Banks take your deposit, lend it out at higher rates, and keep the difference as profit. This spread is how banks make money from your deposits. Banks add fees to transactions, optimizing their profits through small charges. These fees add up, and banks design them to maximize revenue. Banks approve loans with high interest, ensuring profit from the borrower's payments. Every payment Duma makes feeds into the bank's profit cycle. ATM fees are another way banks profit from your transactions. These fees add up over time, and banks design them to maximize revenue. Banks promote investments that benefit them, but they downplay the risks. Investments can be risky, but banks profit from your trust in their recommendations. The banking system profits from every transaction, from deposits to loans to fees. Banks profit from deposits, loans, fees, and investments, all designed to maximize their revenue. He stands at the bank, a symbol of his past. Now he feels a shift. Awakening realization hits him. This is where it all begins. The bank represents more than money. It's a place of power, interest, and the choices that led him here. He's ready to awaken. The antagonist's motives are clear now. This confrontation isn't just about money, it's about control and hidden agendas. What he thought was a simple transaction is a trap. The conflict escalates, and the stakes rise with every word. This evidence changes everything. It's not just about money, it's about a network of lies and interests. The narrative shifts. What he believed was truth is now a web of deception. This revelation is the turning point. The Allies' betrayal is a shock. They were supposed to be a partner, not a traitor. Trust is shattered here. Alliances are tested. Who can be trusted now? The betrayal forces him to question everything. He can't stay. The pursuit begins, and the evidence is his only hope. Every step is a race against time. Can he escape? The evidence is his lifeline, but the antagonists are relentless. This is the climax of his journey. What does he learn? The consequences of his choices are clear. This reflection is a moment of emotional depth. Past decisions haunt him. He realizes that money and interest aren't just numbers, they're tied to his identity. An alliance forms. The enemy's motives are unclear, but the deal could be the key to his survival. New dynamics emerge. Will this alliance hold? The stakes are higher than ever, but hope is renewed. The protagonist faces the antagonist in a climactic showdown over the bank's fraudulent practices. The conflict reaches its peak as the protagonist dismantles the antagonist's scheme. The protagonist grapples with the aftermath of the battle, realizing the full extent of the damage. The conflict leaves lasting scars, hinting at future challenges. Duma discovers how his $100 deposit becomes $1,000 through fractional reserve banking. The bank lends 90% of deposits, creating new money in the economy. The banker reveals how they profit by lending most of the deposited money. The banker confirms the 9% spread between what they pay and charge. Duma calculates the profit gap between what he earns and what borrowers pay. The bank makes $9 profit for every $100 loaned through the interest spread. Duma realizes banks make money from fees even without profitable loans. Banks profit from recurring fees regardless of loan performance. The parent reveals how credit cards generate massive profits from high interest. The parent highlights the extreme profit margin from consumer lending. Banks don't just lend to people, They fund corporate bonds and IPOs with your deposited money. Every IPO generates millions in underwriting fees, while your money sits in their reserve accounts. Your $100 deposit joins billions in other accounts, then gets multiplied across thousands of loans. Tiny spreads on billions equals profits that fill entire skyscrapers with gold bars. That $20 DoorDash tip you deposited becomes $200 in loans at the bank. Same money, higher interest rates, ongoing fees, your dinner money funds their profit machine, your deposit goes straight into the loan pool, then gets lent to someone paying higher interest. The bank keeps the difference. That spread is pure profit from your deposited cash. You earn 0.01% on your $100 deposit, while the bank loans it out at 5%. That $4.99 difference, that is the bank's profit from your single dollar. Overdraft fees, ATM charges, monthly maintenance, bank's profit even when loans lose money. These fees extract more revenue than most people ever see from savings interest combined. Your $100 deposit lets banks create $1,000 in loans through fractional reserve banking. 10 times the loans, 10 times the interest income, all from your single deposit. Banks manage risk by spreading loans across thousands of borrowers, ensuring no single default sinks the entire system. Your DoorDash deposit becomes part of this massive balancing act, earning interest while funding someone else's loan. Government backing through FDIC insurance allows banks to operate with public confidence, protecting your deposits up to $250,000. This safety net means banks can take calculated risks with your money, knowing the government has their back if things go wrong. Your DoorDash deposits earn 0.1% interest, while the bank lends that money at 5%, pocketing the difference as pure profit. Add in overdraft fees, ATM charges, and monthly maintenance. Your small contributions fund the bank's massive profit machine. Your entire financial relationship with the bank is part of a vast profit-generating ecosystem, where every interaction feeds the machine. Now you understand the game. Your deposits fund loans that earn interest, while fees add layers of profit you never noticed before. The bank pays you 0.1% interest on your deposits, but charges borrowers 5% for loans, pocketing the 4.9% difference as pure profit. That tiny percentage spread becomes billions when applied to millions of loans. Your DoorDash earnings help fund this massive profit engine. Your DoorDash earnings don't just sit in the bank, they become loans for small businesses, multiplying their impact through the economy. That $100 DoorDash deposit might actually enable $1,000 in loans. Your money works harder than you ever imagined, while the bank profits from every transaction. Beyond interest spreads, banks profit from a stack of small fees: $5 monthly maintenance, $35 overdraft charge, $3 ATM fee, each adding dollars to their bottom line. Your DoorDash habit might seem small, but combined with millions of customers, these tiny fees generate billions in revenue, profit you never see, but always pay. Every time you swipe, the merchant pays about 2% to the bank, hidden in your purchase price. That tiny cut adds up, feeding the bank's profit engine without you noticing a single extra fee. Banks bundle loans into securities, then sell them to investors, turning debt into immediate cash. They keep origination and servicing fees, so each loan keeps earning money long after it's issued. Parent Wojak got a surprise maintenance fee on his account, a few dollars that appeared out of nowhere. Banks rely on such unnoticed charges, turning inattentive customers into a steady source of cash. Regulators require banks to hold capital cushions, limiting how much they can lend versus deposits. That safety net forces a spread between loan interest and deposit rates, guaranteeing bank earnings. Duma decides to track every fee, compare account yields, and ditch high-interest credit cards. Small changes add up, turning a passive loss into active money protection. Duma discovers his bank's profit model hinges on fees he never saw, shaking his confidence. The realization hits hard, making him question every transaction he's ever made. In a panic, Duma closes his account, losing access to his emergency funds. Now he faces compounded costs, proving a single mistake can cripple his financial safety. You tried fixing the mistake, but every step feels like hitting a wall of red error messages. The setbacks pile up, testing your resolve, yet a thin thread of hope keeps the effort alive. Exhaustion hits hard, but the lingering purpose flickers like a dying street lamp. That tired spark pushes you to ask, what if I actually understood the system? A sudden question erupts. What am I really fighting for in this endless money maze? That challenge forces you to reevaluate every habit, every swipe, every hidden fee. You remember the first time a tiny fee slipped past you, unnoticed like a whisper. That memory sharpens the present, showing how past oversights built today's financial pressure. One path promises deeper knowledge, the other keeps you stuck in the same fee loop. Choosing to confront the system means risking comfort, but it might finally break the cycle. The aftermath feels both empty and full. Answers arrived, yet new questions linger. Whether you act or not, the choice reshapes how you watch your money move. Banks take your low-interest deposits and lend them out at a higher loan rate, pocketing the spread. That tiny percentage difference fuels billions in profit, hidden behind everyday transactions. Banks don't just profit from interest spreads, dude. They layer fees on top like a toxic cake of nickel and diming. Account maintenance, overdraft charges, ATM fees, each one seems small, but they compound into real money for the bank. It's all connected, man. Your deposits get lent out, fees stack up, and the whole machine runs on tiny spreads most people never notice. Every DoorDash order, every subscription, the bank profits from the friction in your money flow without you even thinking about it.